to kick us off with your thoughts on market sentiment right now. S&P back at all-time highs pretty much. Things are looking good. Santa rally. Where's your mind at?
Yeah, I thought it was a solid relief rally off of the low. We got a little bit into overbought territory, and today kind of consolidating those recent gains looks healthy to me. I'd like to see this quickly recover and not turn into anything more serious than just a little pullback. I think in the bigger picture, that's healthy. And looking at volume today, there was a lot of talk about how volume was light on the way up, but I don't think that's so uncommon given this time of year and a holiday. And now we're pulling back on even lighter volume. So I see all of that as normal and kind of working through the news cycle with Omicron and that too. And I'm encouraged. I like the action. I think the right names, growth names, some of the ones that had been hit hard recovered nicely. And I think it sets us up well, obviously, when the S&P is hitting new highs. I'd like to see the NASDAQ follow suit. Small cap growth not acting nearly as well as the S&P and the NASDAQ. I'd like to see it get back above that 300 level, and I'm referring to IWO. The 200-day moving average is right around 301. Just above that, you have the 50-day at 303. I'll feel a lot more comfortable with what I prefer to trade in growth if we get back above those levels. But I'm definitely encouraged. If you zoom out on the IWO too, that channel that we've seen pretty much all year, the lower end of that range held again, and now we're headed back towards kind of the mid part of that channel. So, like I said, 300 is probably a big level on IWO that I'll be watching. And I think if we can go sideways here a little bit, build up the energy maybe for a push through there.
Awesome. Thank you so much, Ben, for those initial thoughts. We'll definitely dig into that specifically with some of these indices. I did want to talk about IWO and some of the others. Okay, Brian, throwing it over to you. Same question, just general thoughts right here with these last few trading days, and then going into 2022 with some market sentiment.
Yeah, I mean, it's been a great environment for stock pickers. We, have obviously seen throughout the year that, the small caps, mid caps have underperformed. They're, back to the middle of the range here. I look at the IWM. Ben looks at the IWO. The IWM is the Russell 2000. That's just something I've looked at forever. And again, it's right in the middle of the range here, which tells us that, to me, and I think, for probably Ben's style and a lot of people who consider themselves swing traders, not to speak for anyone else, it just reaffirms why we're swing traders, that we can focus on the action of the individual names, avoid the stocks that are so-called growth stocks that are declining, like things like PayPal and Zoom and all the ones that we've spoken about that have been destroyed this year. It's been a two-way market. And, I don't like to short stocks like PayPal or Square or, the ones with these strong fundamentals. Even when they're in clear downtrends, simply because they can turn around, and those are the ones that institutions like to go back to put money at work. But there's been good opportunities on the short side this year. Right now I don't have any shorts that I'm in, and it's always a function of listening to the message of the market. I've got stopped out of a little bit of I bought AMD at 142, sold a third at 145, got stopped out of another third at 152.09 today, and am holding that final third with a stop down just around 149 and a quarter. So things like that, it's just more to me, these grand macro themes and all these predictions that we see at the end of the year, to me, are pretty useless. They've got nothing to do with the way I approach the market, my time frame. It's about controlling risk, finding the low risk situations, listening objectively as possible to the market, and finding those, opportunities. If we're in a downtrending market, but I see a great looking long setup, I want to take a position, but I want to make it a small position just so that I have some exposure, but I can still control risk. So my theme will never ever change at the beginning of the year, the middle of the year, the end of the year, whether it's 2022, 2080, or whatever it is. I doubt I'll be here for 2080, but it's about solid plan of action based around market structure, and with at its cornerstone risk management for my time frame, which is something that I like to harp on. That everybody's got to know what their time frame is and stick with it, and realize that there's so much noise, especially this time of year, that you can get sucked into. You see that everyone's got a list of these are going to be the big winners next year. These are the low price stocks that you have to keep an eye on. These are the EV stocks you've got to keep an eye on, and just take it on a stock by stock basis. Nobody gets all the winners. I like to point out, I did yesterday. I had that. I forgot even the name of the stock, but I put a box. I put box on 3 days ago and said, here's a stock that typically goes, or it looks like it's about to go, but never does anything. It's most likely going to go. It goes without me, and sure enough, it did go without me. So, I don't get all the winners. I'll talk about its stock, but it doesn't mean that I'm going to be involved in it because I might miss it, or there's something I don't see that doesn't make sense at that time. And don't stress out about what other people are doing. Focus on the process, and that's going to always remain my theme, whether it's light volume, heavy volume, a holiday week, or before a Fed meeting, whatever it may be. There's always a reason to worry.
Very interesting. Always a reason to worry. Okay, so two things off of that. So the first is some people have been asking for specific stocks to be analyzed. I just put out a tweet and I also pinned it up top. It should be up there in a second. And if you would like, you can drop any tickers that you want into there, and we will try to get to as many of them as possible towards the latter half of this call. And then Brian, with that always reason to worry, and then when you say you're not short on anything, it makes me feel like there's kind of a lot of uncertainty in here, right? It could go up, could go down here. Is your position sizing a little bit smaller as we finish out the year?
It has been. I've been taking, what I consider, I call watch list idea sizing, which, my normal swing trades are a full risk unit. I've been limiting it to a half risk unit. But, then you get in a stock like AMD at 142 with a half a risk unit. So, basically half your normal size, and you can still make 10 points on, 1/3 of it and, hold a third. And, it's better than the alternative of, hey, it's light volume, I don't want to participate this time of year. A lot of people will do that. Instead, there's always going to be opportunity out there. So rather than just go on strike and say, well, it's a holiday week, I'm not going to participate, I want to be involved in the action. I'm aware that there's lighter volume, and that's a reason to think that if I don't honor my stops, they could come down quickly. But low volume doesn't mean anything. You don't get paid on volume. You get paid on price action. So who gives a shit about the light volume? I'm sick of hearing about it. It's it's part of what happens in the market. And we've got to trade the market in front of us, not the one that we want. So. I'm not sure I answered your question. I might have gone on a tangent, but the point is, I do trade with smaller risk unit in this type of environment. But this is still what I do, so I'm still going to do it if I see opportunities there.
Awesome, thank you, Brian. And you did answer it. It was regarding position sizing. You mentioned how you're kind of cutting down to about a half size there.
Right. Cool.
So that does make sense. Thank you, Brian. Okay,
yep.
Let's keep it rolling. Richard, same topic over to yourself. How you're attacking this market right now, approach. I know that you're more swing trader oriented versus the day trader, so perhaps a little bit different perspective than these others.
Yeah, sure. So I think I'm approaching things pretty similar actually to Brian and Ben, what they mentioned before. We've had a really nice push off the lows here on the major indexes and a lot of growth names as well. mostly focusing, as I think I've said in previous Twitter spaces, on the semi space as well as the computer data storage. In the growth space, those are really the leading groups. As this moment, tickers like AMD, MU are ones I've been playing. And yeah, I kind of forgot the question, just kind of how I'm treating the current environment with position sizing. Is that a gap?
Yeah, not just position sizing, but
Yeah,
just, going long on certain names, or there's certain sectors that are more appealing to you, just overall your
right.
strategy right now.
Right. Like I said, focusing a little bit on semis. I'm not completely exposed. I think I'm about 50% exposure right now. Mostly in MU, I got a 20% position, AMD, and also some Tesla in there as well. But I'm not taking too many trades right now. I'm kind of in holiday mode. I'm actually vacationing right now, so I'm trying to focus a little bit more on family and during this time of year than the market every single day. But I've been watching the recent push off the lows, and now we kind of got a little bit of consolidation today, as Ben was talking about, which I think is completely normal. And if we go sideways for a few days, that should set up some nice setups up the right hand side in basically a lot of the growth stocks that I'm watching recently. Also, keeping a close eye on some IPOs that may be developing, stocks that haven't run already 300% over the past few years, and could be just kind of starting out their advanced phases. I think those are definitely a few to watch. Stuff like GFS in the semi space, particular, not acting well at all today, fading pretty well off the highs. But if this kind of builds out over the next few days, I think that would set up a really nice pivot near the highs of today. So those are kind of some that I'm keeping an eye on.
Okay, perfect. Thank you, Richard. And Jack, coming to you. Same type of question.
Cool. All right. So I was watching as far as like market direction and stuff like that. Breath. I like to look at the RSP, and today RSP is actually green, which is kind of nice to see. So equal weight S&Ps. But then when you compare it to the Qs, equal weight Qs, QQQE, you have a solid red day so far. So that's kind of I think that's kind of like the bifurcation in the market. But I'm not overly concerned because we had, 4 really good days in a row, and I think the market just got a little bit ahead of itself. So um, I'm not really like today. Didn't really do too much. One thing got stopped out, and I did buy one position. I bought some snow today, even though that kind of reversed on me so far. But that's what I've done today. It's really not much at all. But what I am watching, I'm watching the semis. I think the semis are look really strong. They've been leading the market, and I think that if they fail, then I think the rest of the market's going to go with it. I think there's a ton of great looking setups from people have mentioned AMD and MU, ALGM, CRUS. There's just a ton on, which is was on semiconductor. Just a ton of those names. I'm in some of them myself. Look great, but again, as an indicator, I think the semiconductor SMH is leading the market, and I think that's going to be a good thing to watch going forward. And the other stock I like to watch as an indicator, and I do own some also, is Tesla. I think Tesla has been one of the real market leaders. It's retested just recently back on the 20th, retested its breakout. It held, it reversed higher and shot up pretty nicely over the last 4 days. And it's trying to break out of, kind of flaggy downtrend line area. So again, as an indicator for health of the market, also as a tradable asset, I think Tesla looks really, really good right now. And it's just not doing anything wrong. It's doing everything right. And so I think that bodes well for the market, at least in the short term. Um, I really don't like to look at prognostication about next year, about what Brian said, because, we just don't know. It's funny. Last year, Richard and I had made a video about themes for 2021. And when you look back, we were wrong all over the place because what looked good at the end of December, by the time, the first quarter was over, it was a completely different market. So there's almost no way. We're all just guessing if we think what the theme is um, for 2022. Because every quarter it's going to be potentially a different theme, or every month it could be a different theme. What's leading and what's not leading, depending on on so many different factors. So I'm not a big fan on the prognostication part.
Yeah, I think that makes sense. It's a very difficult thing to do to predict the market, and especially in the last year or two has been all over the place. So fully agree with you there. And that's why I love to do these on, weekly or biweekly basis, these spaces, because so much does change. And obviously the panel that we have up here is a lot more focused on day trading, swing trading. They're not necessarily getting attached and holding names for years. Stock market news and myself do a little bit more long-term investing, but you're hearing from a panel where they really do have to be super focused and laser focused on.
All right, I think Gav might have gotten kicked there, so we'll just keep it rolling real quick. So with that, just would like to send it over to Juicy for his quick thoughts as far as current market sentiment and what your game plan is as far as heading into the new year.
Hey guys, again, thanks for having me on. Yeah, for me, I think that long story short, I'll just flat out say it. I am bullish on this market, but we do have to take into account the fact of the matter is we went from SPY, which what I like to gauge the market. If you look at SPY, we go from 451, 452. Don't quote me on the exact numbers, and we shoot straight up to 477. This is an index. This is not Tesla, right? So when you have that type of move on the indices as a whole, be open to consolidation. And this is what we're seeing. After this big run, we're having some consolidation today. I honestly think that we're going to pull back into this 477 through 472 zone, which was the ascending triangle break. Overall, I'm bullish. If you draw a Fibonacci extension from 1122, you put that thing down to the low of 12.3, you got an extension of the 1618 at 487, which I firmly believe that we will go touch that level. But before we go up any higher, I do think we need to consolidate. So with that being said, going into the day, I was like, listen, team, I do run a service, I run a team. I'm like, listen, we're going to trade a lot lighter today, right? Drop your position sizes back. And a lot of these trades were like my P&L was funny today. It's like, it's up, back down to break even, up, back down to break even. And it was just a choppy day. I just walked away. So I've pretty much reduced a lot of my exposure. I had that Microsoft trade I did have huge size on. I cut that out today. I have some smaller exposure in Netflix still, but that's pretty much it. So how I'm playing it, I'm taking it cash. I'm taking it day by day because I do think we consolidate. And I do think we break and go higher. But that doesn't mean that's going to happen. We could consolidate and break and go lower. So for me, I'm going to react to the market, let the market just range out and figure out what it wants to do. Like they were saying, we could talk about this all day. Nobody knows what's going to happen in 2022, but the chart would tell you if you pay attention to what it's doing. And right now we're consolidating, so that's not an environment to push the gas.
Thank you, Juice. And yeah, I saw your request, and I'm gonna keep most of the rest of the questions focused to this panel, but I always wanted to give you a few minutes to give your thoughts. So appreciate you coming up. Okay. Hopefully everyone can hear me and I'm back. Yeah, I'm having a ton of technical difficulty. So if I get booted, Joey knows how to run the show. He's on that Wolf account. If you are here right now, you already heard from all of our speakers except Stock Market News. I'm going to go to in just a second, but make sure these are really amazing people to follow. You can see most of them have tens of thousands of followers for a very good reason, if not over 100,000. Brian Shannon is one of the leaders in this community with technical analysis, having created indicators. You have Richard and Ben who join our spaces pretty much every single week, putting out tons of content. These guys really do their homework on the weekends. They spend hours trading hundreds of different charts and they put that out for free. They all write newsletters. Jack has been consistently coming to these spaces, adding tons of alpha, like it in the name. And then Stock Market News, of course, and the Wolf Financial.
That's pretty fitting right there. Just as he's, tooting everyone's horn, pretty classic that he gets booted there. But yeah, as Gav was saying, all the speakers up here are phenomenal. So you were definitely do yourself a favor. Check out Ben, Brian, Richard, Juicy, Gav, Jack, everyone up here. Absolutely worth a follow, putting out consistently great content. So do yourself a favor and check them all out. So with that, we're going to transition into our next segment here. So if Ben, you want to start it off and just talk about the top 3 stocks on your watch list for this week here.
Okay. I'll start. Let's Dollar Tree, one of the few that's acting well today, coming out of a little flag pattern, descending trend line off of the top, anchored VWAP off of the high, reclaimed that today as well. So that's DLTR. I'll put that one on your radar. TRT, one that we talked about a couple weeks ago, came out of the flag. Looks like triple inside. If it holds where inside today, this will be the third consecutive day inside. So watching that flag again, had a great move. Basically came out over $9. That flag, what was the high? About 1373. Now pulling back, trading 1216. But this stock likes to flag and then really move. So I'll be looking for that inside day to come out to the upside, just for a quick scalp there. A third one, Snow, another one I'm watching, kind of a VWAP pinch setup, as Brian has taught us. Anchored VWAP off of the high. Anchored VWAP, I'm going back to a swing low over the summer in July, which happened to catch the most recent lows. Pulling back today, I've got a descending trend line there off the top too. If it comes through that descending trend line, and we're talking about, let's see, about 354 or so, 355, comes through that level, you'll not only take out the descending trend line, volume shelves right there, get back above the 50-day moving average, as well as anchored VWAP from off of the high. So I'll throw those three your way: Dollar Tree, DLTR, Snow, SNOW, and TRT.
Awesome stuff, Ben. Thanks for that. And with
Sure.
that, we'll kick it over to Brian for his thoughts on a few names he's looking at. All right, I'll bring Brian back up here. In the meantime, I'll send it over to Jack if you want to share your three names that you're looking at this week.
Sure. All right. So I actually bought some snow today. Unfortunately, it reversed against me, so I'm down a little bit. But for exactly the same reasons that Ben said, everything is shaping up right in this particular name. It's the first real base from the IPO. Also, it's a very large base, and just over about a year in the making. So I think it's going to be a big deal if it breaks out and breaks above that trend line. Again, I jumped it a little bit this morning, and so it's making me pay. I'm down about 2% in the name, but but I think that it still looks fantastic. And so that's one. I like ALGM, um, which is Allegro Microsystems. It's a semiconductor name. It's had a giant breakout and pulled back so far. It's still up on the day a little bit. So I'm watching that, but it has a really nice area for risk management. It did get a little bit ahead of itself, and I do have a hold of position this one. So it's not doing anything wrong. I wish it didn't pull back as much as it did today, but overall, it's still in an uptrend. It's still right near all-time highs, and it may close at all-time highs today. We'll see how it closes. So ALGM is looking good. I like CubeSmart, CUBE. So CubeSmart, they do long-term storage or whatever, and so it's got a very defined area right around this 56-ish or so level, which is just now slightly above. And it's kind of consolidating nicely. I like the volume on the bottom, showing some signs of accumulation and an increase in uptick in volume. And the moving averages are pretty tight around that. So a big, I really like how that moving averages are now clumping up, and it is a place I can manage risk against very easily, which is what I'm always looking for, right? So if it breaks, below, I'd give it to $55 or so. If it breaks below $55, then I would be probably out of the name. But I do own some of that, and I'll give you one more since me and Ben duplicated on Snow. Sprouts Farmers Market, SFM. That one, if you just zoom out just a little bit, this area that is against right here, going back from 2016. This is the area that it's kind of hit and kind of reverse, hit, reverse, hit, reverse, and so now it's come up to this 29 and a quarter or so ish area, and we'll see what happens here. Obviously, I'm not a buyer here, but if it can do a little consolidation and then get above, maybe above 29.50ish or so, that's another place where we can manage risk. And again, it hasn't been in that range in the last 5 years. It hasn't been above, 29.50, 29.75 or so within the last 5 years. So I think that's a big spot for it. So Sprouts Farmers Market, SFM. Those are my three.
Awesome. Thanks so much, Jack. And with that, we got Prime back up, so we'll send it over to him for the three names that he's got his eyes on this week.
Sure. Thanks. Looks like it might be the Android problem because I just have been dropped off there a couple times in a row. So right now, today, like I said, I've been getting stopped out of little pieces. I got stopped out of a little bit of AMD. I'm close to getting stopped out of another third of ALGM. I got involved there at 34.10. And I know Jack just covered that. So I've got 2/3 of that position left. I think that, a couple names that I'm keeping an eye on for fresh purchases. And again, I always speak from a swing trade time frame. Ideally, I can hold these stocks for 2 to 3 weeks. Generally, it would be 3 to 6 days, and if they don't work, then they tend to be day trades, and I get stopped out right away. But I'm not in these names yet that I'm going to mention. One is DBRG. Digital Bridge is its name. If you look at the weekly chart, it's really got a lot of room to run based off of this 3-year base. If it can get beyond, it really needs to get beyond 850, 875, but I want to buy it above 830 for a swing trade and possibly.
All right. I think it looks
Another one
like
bites the dust.
Yeah, there he goes. Got to get this man an iPhone. But in the meantime, we'll kick it over to Richard for his three stocks he's looking at, and then with that, we will move on to some more in-depth analysis here.
Cool. So yeah, in terms of three stocks I'm watching, I'll start with SLAB, SLAB here. Really nice base forming right at all-time highs, and you've got that volatility contraction going after a really nice breakout from a longer-term base on 1027, and now it's just kind of contracting from left to right, really developing nicely, and you've basically got a pivot right at today's high now at 209.27. So ideally, this goes sideways for a few days, maybe forms an inside day, and then you've got kind of a short-term setup right at that pivot that would trigger a longer-term time frame breakout into all-time highs. So that's definitely one I'm watching. Another one on my list, which is still 100% developing, is a recent IPO, GTLB. This is kind of like GitHub for enterprises, if anybody's familiar with that. Right now, it's consolidating just under its IPO anchored VWAP. And then the lows of this recent consolidation are from the highs set on 11.9. So I love to see it just go sideways and really have a firm breakout through that anchor VWAP through about 97.66 or so on volume and make a push up the right-hand side. This is a little bit further down in the base than I would like. So this could still be a setup that needs to develop a little bit more. Lastly, let's take a look at APP. And this is another recent IPO, not quite as recent as GTLB, but it's forming its kind of second base here. And let me check the depth on that. Looks like about 30%. And I really like how it found support right at some pretty prominent anchor VWAPs from the IPO day. It consolidated just above that. And also, if you draw an anchor VWAP from the high of the previous base, 618, those big hammer bars on 12.3 of 21 and also 12.17 of 21 happened right basically off that anchor VWAP. So this is setting up nicely, potentially forming a nice bottom of a base. And right now, it's pushed back up and is finding resistance at around 96 or so, as well as the anchor view out from the highs. So once again, still developing. I'd love to see it go sideways, pull back gently on lighter volume, and then have a definitive breakout through 96, 97, as well as break above that anchor view out from the top of the base. I found that's usually a really nice spot to get into a potential name like this one. But those are some that I'm watching, as well as just others in the semi group, AMD, MU. Those are high up on my list to either add to my current positions or just watch in general. I think everybody should be watching some semi names as well as some data storage. PSTG is another name within the data storage group that I think is worth keeping an eye on. But yeah, those are a few names I'm watching as of this moment.
Awesome. Thanks so much for that. And just real quick, just want to give a quick shout out to Gav. If you enjoy these Wolf Financial Spaces, gotta show some love to the man behind the brand. He really is the one responsible for putting these all together. So major shout out, respect to Gav for making all these happen. So definitely do him a favor, give him a quick follow. You will not regret it. So appreciate what Gav is doing and really putting these on. A lot of free knowledge shared. So shout out Gav. And with that, I will send it over to Gav for some quick thoughts. And he is kicked. That is pretty fitting. We got to get this man an iPhone. So with that, I'll keep it going. So we were talking about in the beginning some certain tickers that you guys wanted to have analyzed. So we can dive into those. Or just actually real quick, here's what we'll do. We'll go to stock market news. If he has any quick thoughts on the market in general, and then after that, guys, we'll dive into these specific names. So stock market news. You have any quick thoughts here?
I'll keep it brief just because the quality of speakers we have up here. Maybe I'm getting slightly shorter on Twitter just based on what's been happening in space.
Turn it into the ground.
Needing to step their game up. Hey, listen, there was a couple month period where Spaces really kind of was great and wasn't as laggy or glitchy last month or so. It's gotten crazy, but what I'm really noticing with the market right now is kind of what's been working over the last month or last couple months is continuing to work. These mega cap names, we're seeing SPY right back at all time highs. It's pulled back a little bit. I'm looking now, but we're still right there. Hit it today. While this whole growth stock complex, the Cathie Wood stocks are still struggling. So who knows when that turns? Who knows, exactly what's going to happen? Market rotation has been happening a lot under the scene, but the what's been working over the last month has been continuing to work, and what's not been has been continuing to not be working. So that's definitely where I'm noticing with that. Say it again one more time. Big shout out to everyone up here, all the speakers. Make sure you're giving them a follow. And yeah, I'll throw it back to you, Joey or Gav, if this is the 2 minutes where he's actually up here.
Yeah, right. It's my 30 seconds that I'm up here. Real quick, what I'll say is if you're not already posting a stock on the pinned tweet, go ahead, drop a stock you want analyzed. We have several already, but we still have like 30 minutes on this space. So go ahead, drop that. We'll get your stocks analyzed on that pinned tweet. We only have like 16 comments right now. That's all I got. Thank you, Joey, for the big shout out. I'm trying to get this account to 10K. If it's the last thing I do, I'm going to roast Twitter Spaces for this. I am DMing them right now, my contacts there, and trying to get answers back. But who knows? Plus, we also got Brian back up here. So, Joe, if you want to throw one over to Brian while he's up here, and then you could just keep it going around. I'll probably keep quiet because it kicks me anytime I talk.
Awesome. That sounds great. And again, big shout out all our speakers for fighting through the technical difficulties. We got our guys, Ben and Brian, getting kicked up pretty often. So shout out to them for persevering and keep coming up. So appreciate all our speakers for hanging in there. So with that, we'll send it over to Brian for his thoughts on SoFi, what he's seeing in the setup there.
SOFI, I see a stock that has had just some big ranges of 14 to 24 three times this year. We're back down to the 14 level. I don't think it's likely it's going to make another one of these moves up to 24. To me, it looks like dead money. Forget about it until we see at least the last move came right when it was kind of supposed to. That is when the 50-day moving average had flattened out and it made a higher high above that. It's going to take probably 6 weeks for that 50-day moving average to flatten out again based on, looking back 50 days. So to me, it looks like dead money. No reason to really, nothing to be excited here that I can see.
Awesome. Appreciate that. And with that, we will kick it over to Ben for the next one. So we got Tesla.
Tesla. I don't mind Tesla so much here. Kind of got a double bottom form in there. 201.95 would be the pivot. That's the midpoint of that double bottom. So I'd like to see it come through there on some volume. That's right side undercutting the left is what we like to see. That kind of shakes out the weak hands and then right back up. If you draw a descending trend line too off of the highs and then the midpoint of that double bottom pattern, you're kind of right there. So that would be early entry opportunity if you didn't want to wait on that midpoint pivot. I would wait for it to come through there. You're above anchored VWAP off of the high, anchored VWAP off of the gap. You're trading above those levels. Got a volume shelf right around 1060, it looks like. Let me see what this level is. Yeah, right around 1060. So if it does come in a little bit more, that level looks good. 50-day moving average just below there. But I don't mind Tesla either through that trend line or wait on the pivot or wait till it comes back, like I said, about that 1060 to 1057 area in there. I could get involved there too.
Awesome. Thank you, Ben. So with that, we'll kick it over to Richard next for some thoughts on Micron technology, and that is ticker MU.
Nice. Yeah, so MU is one I'm currently long. I don't like the action today, although it's kind of normal given the quick move up it had. But just looking at the big picture, if you go to a monthly chart on this, this is trading almost at the all-time highs here that it set all the way back in basically 2000. So definitely want to see a significant breakout through that high. That would be really bullish. But going to a closer time frame, looking at a weekly chart, it's had a nice move up the right-hand side of this pretty long base, about 10 months here. And then you're kind of forming out a handle, which it just broke out on due to a really nice earnings report. So I love stocks that gap up on earnings on high volume. That's really, really bullish for me. That shows that institutions are kind of initiating positions and likely they'll continue to be accumulating positions throughout the next few weeks and months. So I love trying to trade those trends that those institutions create. After that gap up on earnings, and that was on 12/21, we had a nice and quiet inside day on lighter volume, and it also had a nice closing range, definitely a plus for me. And then you kind of had a reconfirmation, an inside day and up setup, a nice move on last Thursday, up 4.5%. Then this Monday, you had once again a nice inside day, quiet day. And I'm kind of expecting this to just kind of flag out here. But today is a little bit of maybe a caution sign because we did undercut the prior day's lows. But it could just kind of go sideways, form a flag above the prior pivot at 91. I think that would be very constructive. And then I'd love to see just kind of a reconfirmation through a short downward trend line that you could draw here. And I'd like to see it go sideways, as I said, on lighter volume, and then potentially basically an ignite bar, that type of thing could start a move up toward the top of this prior base around 97, which then would line up pretty well with a breakout all the way through those 2000 highs. So MU, I like to look at that chart, definitely a focus of mine. And just the space in general has been a potential leading group here. PSTG, SIMO, some other names I'm watching as well within this overall group.
It's great stuff, Richard. Thank you for that. Next up, we'll send it over to Jack for his thoughts on Macy's, and that's ticker M.
Let's take a look at Macy's here. All right, so All right, so it looks like there's an area right around this 22.75 to $23 or so that was resistance back in, was that January 27th, 21, and then came back up there in August 23rd, and then kind of chopped around in there and finally broke out back on October 18th. Had a big run up and then came back and retested and held. So that's pretty bullish that we know that this $23 or so area held as support, right? Because we don't only know that after the fact, and that is awesome. And it's had a nice run the last 2, 4, 5 days, and is trying to make the turn now. So it's above the 9-day moving average, but below the 23-day EMA, and again, probably below the 22 if I put that on there. But more importantly, the 50-day. The 50-day is still rising, and I think that's a positive. But if it starts living below the 50-day and makes a lower high, I would get more cautious with the names, because then it's going to start to flatten out and turn down the 50-day, and that's not a place we want to be. But as of right now, as long as this price, can get back above, the 23-day, and then eventually, this 28.31 where the 50-day is, I think it looks pretty good. We know where the risk is, right around $23, I think, for a longer term look at this. $23 is where I would, below that, there's no reason to be involved. Some nice things to see, though, is that there's been some very large volume bars dating back to that August 19th and looking forward. So it looks like there may be some accumulation happening in this name. So that's always a positive, right? I love to see these big volume towers. I think that'll, that potentially could be a nice positive for the name. So it's one of those names where, mind your risk on this one, right? I mean, so it's improving, and we know where the ultimate risk is, but it's not, leading the market higher. So that's the only pause I have with that one.
Great stuff, Jack. Thank you. Next up, we'll kick it back over to Brian for his thoughts on Apple, ticker AAPL.
Okay, huge uptrend, obviously. It's been riding this 20-day moving average. That's where it just found buyers the middle of last week. It's short term, a little extended. I certainly wouldn't be a buyer here after a run from 168 to 181. So I'd prefer that it settles down, maybe down towards 175-ish, see how it acts down there. And if it's able to, pull back, turn sideways for a day or two, then I would say you would want to look at it as a possible new money entry. But right now, it's too late. Where has it come from? Again, it's up, from 168 to 181 in the period of a few days. Where does it have the potential to go before it's likely to encounter supply that could become resistance? It got rejected in this 180 area twice this month. So I think your risk reward isn't good for a new entry. But if you're long, that the low of last week at that rising 20-day moving average, to me that would be the worst case place for a stop. But it's always time frame dependent. I always speak from a shorter term time frame than maybe someone who's buy and hold, of course. But it's a solid uptrend. There's nothing to dislike about it except for fresh money. Now's not the time to do it, I wouldn't say.
Great stuff, Brian. Thank you. Next up, we'll go to Ben for his thoughts on the Finchwit favorite. We got Palantir, ticker PLTR.
It is the favorite, right? Love-hate relationship with that one for many people. Let me... I do not like the way this is looking here. More like a bear flag to me. You're below the 10-day, below the 20-day. You're 1705. Looks like there was maybe some support there back in the summer, but not one that I like the look of right here. I like stuff that's certainly above the 50-day, above the 200-day moving average. The stuff that's moving up and to the right of the chart, this one not doing that. From a I like to take a look at the fundamentals too when this is happening, and it's not bad. You're looking at 40% EPS growth going from 15 cents to 21 cents. Sales declined last quarter. You went from 49% to 36% as far as growth. So it kind of makes sense with the way the chart looks and then kind of matching that up with the fundamentals. Not a whole lot to get excited about on the growth side. Now, if this level should hold and we establish the range here and can get back above the 50-day, actually first you got to get back above like that $20 level. You might get a run back towards the 50-day, which is at 22. But I'd be very careful if it a hard break lower from this level. It does set up to me more like a bear flag, and coming from 27 to 7, that's about a $10 move, and that would put it down around those lows from the IPO.
Great stuff, Ben. Thank you. Next up, kick it back over to Richard for his thoughts on Yum Brands. That's ticker YUM.
Yeah, this is one I haven't really been keeping an eye on, but let's take it step by step here. So first of all, going to a monthly chart, really nice long-term uptrend, really from the early 2000s. So that's always good to see. So this kind of looks like a long-term leader. Then, of course, we did have a significant correction down into the 2020 crash here, but it's been making its way back, just kind of stair-stepping higher here, above a rising 200-day moving average. And now just at this moment, we just had a breakout yesterday, actually, from a nice, well-defined base. So you did kind of have an earlier entry down near 128 or so. You had a pivot at that area. That'd be kind of a low cheat entry setup here. Now it's kind of turned over and is respecting the 10-day moving average as well as the 21 exponential moving average. We had a gap down with a good closing range on 1220. Then we popped right back above that 10-day moving average, and definitely a little bit short-term extended from the last short-term price consolidation near 134, but it's a fresh breakout. Unfortunately, there wasn't really any volume on that breakout, so that's definitely a negative for me. So yeah, not much oomph on that breakout. You'd love to see very high volume above the 50-day moving average at least, and then some really nice follow-on days with nice price progress as well as volume, and we're just not seeing that just yet. But it's holding above that pivot, so nothing wrong there. So maybe you get a little bit of sideways consolidation, and then maybe it reconfirms as the 10-day moving average catches up to price. But at this moment, yeah, definitely a chart to maybe keep on your watch list. Not necessarily buyable right this instance, but if you do get that sideways consolidation on lighter volume and they get reconfirmation on volume, I think that would be an interesting spot to get in. One thing I am noticing is that although it's making a breakout in terms of price of this recent base, it's not doing that in terms of relative strength. So the relative strength line is basically just the price over the SPY. So basically, in terms of relative strength, it's not as strong as price, if that makes sense. And I can clarify that as well if that didn't quite make sense. But yeah, something to have on your watch list. I'm not quite sure of the fundamentals of this. Looks like maybe, I don't know, a candy company. I may just be completely out of left field. I'll take a look at MarketSmith in just a second. But yeah, a breakout on not much volume, but maybe one to watch in the coming days and weeks.
Awesome, Richard. Thanks so much. And with that, before we dive into a few more real big names you guys asked about, we'll send it over to Stock Market News, see if he has any names he'd like to focus on, or if there's also, after that, if he could just give a real quick spiel about the calendar. So thoughts to Stock Market News here.
You know, I always spit the calendar off to Gav because he does a much better job. But we'll try and get the B team in here to give the calendar shout out this one. I'll do that first and then get into the stock. There's only one stock I'm going to say, so I feel like we can kind of even skip that, but I'll actually say it later. But the Google Calendar is one of the best things that myself and Gav have created. Honestly, it was pretty much 99% him. He kind of just let me put it on the back end. And what it is, we go live like 15 to 20 times a week. There's so much hours of content, and it's really hard to know when we go live. Twitter only allows you to send out a link for one spaces. So when we have 3 in a day or whatever, it's impossible to know when they all are. Twitter has no way to fix that, so we came in here and created our own way. Basically, we created a Google Calendar that hooks right through your Gmail or whatever email you have, and you can put it right onto your calendar, toggle it on and off. You can unsubscribe at any time. It's super easy, but pretty much what it will do is give you a notification and or let you know every single time we are live. You can look forward to it. It's not only like, oh, we're live this time. It's exactly what the space is going to be, who's going to be on it, and we even post a recording of the spaces after we're done to the email, so you can go and see that as well. This is a really comprehensive thing that we're really trying to improve. The way to get on it, send myself or the Wolf Financial account up here as a host a DM with your email. That's it. Make sure your email is included in that DM, but we will get you right over, added to the Spaces calendar ASAP. I see we got Gav requesting to come back up here, so I will let him maybe kind of add anything extra if he thinks so. But truthfully, we're kind of sitting on the back end and looking holistically at how many spaces we do, and it's just impossible to know when they all are. And we really want to create a way for people to know and get as much of this content as possible, because the level of speakers in this space right now, Ben, Brian, Richard, Jack, it's just so amazing and so informative. That's something that you cannot miss, and we want as many people to come in here and see it. But I'll throw it over to Gav. I'll say one more time, make sure you're sending us an email, a DM with your email in it, preferably a Gmail. It does work best, but it will work with anything. I'll throw it over to Gav if he wants to talk a little bit more about it.
Yeah, nailed it right on the head. Won't add too much to that. The best part is it doesn't clutter up your calendar because you can toggle it on and off. And in addition to that, if you don't like it, you can unsubscribe and it doesn't even tell us. Like, there's no downside. There's only upside. You're probably going to love it. Shoot over your Gmail to the Wolf account or Stock Market News. That's it. Yeah, thank you so much, Evan and them for, and then of course be following the Wolf account and Stock Market News so you'll actually see it at the top of your timeline when you come into the space. And I'll be in all those spaces as well once Twitter Spaces stops kicking me out of them. But I'll turn it back to Joey. I know Brian, I think you have a hard stop at 1, so we'll give you probably a few minutes to wrap up after maybe one more stock, and then we'll take just a couple other names. We'll throw them out there, and we'll probably have everything wrapped up within the next about 20 to 30 minutes. Yeah, back to you, Joey.
Awesome. Thanks so much, Evan and Gav. Be sure everyone check out that calendar. You will not regret it. So with that, we'll send it over to Jack for his thoughts on Airbnb. And then after that, we will go to Brian for some of his closing thoughts. And then after that, we'll get into some real big names here. So over to you, Jack.
All right. So looking at Airbnb, ABNB is the ticker. So it looks like it's this try to break out this 211-ish, 215 area, which was prior resistance. Being a newer IPO, it's very easy to see on the chart. It IPO'd back on was that December 10th? It looks like 2020, and had a big gap up November 5th, right? 13% or so gap up. It looks like it was after earnings. So when you anchor a VWAP from there, it violated that VWAP on November 19th and now has been trending below it. And as you can see, if you put an anchored VWAP there, it actually came back up to it, tested on December 7th and 8th, and it got rejected there. And again, moved lower again. It's now currently sitting under a flat 50-day and right under the 23-day, right above the 9-day EMAs. So basically, it's in no man's land, but it is making lower highs and lower lows from that November, we'll call 17th high, right? So just after that earnings gap up, that was basically the top at this point, and now lower highs and lower lows since. So for me, not much reason to be involved in this particular name. What would change my mind on that would be if it gets above the VWAP from that last earnings gap, which is right now at 181.23. Also, it'd have to get above the 50-day, but that's easier because that's at 178. So again, that 181, which is going to take time. It's not going to happen, today or tomorrow. Most likely, it's probably going to need to chop around, create some sort of base, start making higher highs and higher lows at some level, and then round out the right side of a base. And right now, there just isn't any sign it's going to do that. So until I see that happening, I think it's an avoid at this point.
Great stuff, Jack. Thank you. And now we'll send it back over to Brian for his closing thoughts here.
Okay, I don't have anything earth-shattering to report here. I think it's the markets are in uptrends. Don't fight them. Know your time frame. Don't get distracted by this end of the year stuff and everyone's saying, with their prognostications. Nobody has the crystal ball. It's interesting, talk for your New Year's party about what you think's going to happen. But as far as a trading plan, nothing said from the Barron's Roundtable or any of the other 10,000 predictions you'll see in the next week to 2 weeks will make you money without a solid understanding of market structure and risk management. That's, I'll just say the same thing I said earlier. So, I'll turn it over to somebody else for some other wisdom because to me, it's just keep it simple.
We love that. Thanks so much, Brian. Definitely, again, especially for, whatever level you're at, beginners, intermediate, and we got some of the best in the business up here. So if guys like Brian are telling you guys to, keep it simple, don't overcomplicate things, you should definitely take notice of that. So, all right, Brian, we know you got the 1 o'clock, so thank you so much for joining us. Really appreciate it as always. Everyone be sure to give Brian a follow. You absolutely will not regret it. So thanks so much, Brian.
Yeah, thanks for hosting and having me on. Have a good new year as well.
Appreciate it. And with that, we'll send it over back to Ben. We're going to dive into a few more real big names here that you guys want analyzed. So over to Ben for your thoughts on Google, ticker GOOGL.
Good. I like this one because this is one that I actually had on my radar and watching. I've got a pivot there, 29.25, and it's trading 29.33. So what I'd like to see is it comes back now, retests this level, and see it hold. That's kind of the way I'd approach it because I really wanted to get involved through 29.25, but it came in 4 days. What was the low? Like 27.80. So it went from 27.80 to 29.30 almost, or I'm sorry, 29.60 in just a few sessions. So I said, let me let it come in. Let me see how it acts when it comes in. See if it holds that pivot, retesting from the upside, and what that volume looks like when it comes back into, and then kind of go from there. But I like Google here. I think it's one that I may even still try to get involved with. I watch what I call power of 3 setup, and that's when the 10-day, the 21 EMA, and the 50 MA get real tight, and they don't get much tighter than they are right now. They're within about $9 of each other from low to high. And what I look for there is that we get that kind of push through, and then those moving averages come into alignment. The 10-day gets above the 21, which gets above the 50, and then you can kind of use those layers of support below to manage risk and kind of trade around that core position. Above that level, I was talking about 29.82 is another level to keep an eye on, and then the high 30.19.33 above there. So taking out those levels, I'd want to see at least a increase in volume through those pivots above. I don't necessarily need the volume if I come in at that alternate pivot that I mentioned, 29.25. I just like to see that it doesn't come back in on really big volume. But I like the way that it's setting up. I also have just below the 50-day moving average, I have an anchored VWAP from the October low, which is basically the bottom of the base. So if that pivot that I mentioned at 29.25 fails, the next level I'd be looking at would be that anchored VWAP, and that comes in at 28.73.
Awesome stuff, Ben. Thanks so much. Next up, we'll send it over to Richard for his thoughts on another fan favorite. We got Coinbase, ticker Coin, COIN.
Sure. Let me bring up that chart here. And yeah, Yum Brands is Pizza Hut, Taco Bell, and KFC for those who are wondering. So yeah, taking a look at Coin, it's still below its IPO highs. I had this and I had it on for a trade back near 275 as it broke the anchor view out from the IPO. Wrote it up, then got stopped out near earnings around 321. I think was my last sell here. But right now it's just kind of chopping around and basing, and it just rallied very strongly back into that anchor view out from the IPO, and then basically gapped down today. I don't like the action today at all. It's kind of a changing character after such a strong move. If it was really being accumulated strongly, I'd love to see it just go sideways tightly under that anchor VWAP and form a pivot right at that level near 282. But instead, it took out today's low, had that gap down, and is back below a declining 21 EMA. It looks like the 50 SMA as well is just now sloping down. So right now, it's just kind of in a basing process, trying to figure itself out. And it just looks like right now it's kind of entering a longer term phase where institutions are trying to decide whether to really accumulate this stock. And until it really figures that out, I think there's better opportunities out there in the market that are trending above their key moving averages, that are breaking out to all-time highs. And when this decides to be a leader, it will show itself with a breakout on strong volume and really start a nice trend above those key moving averages. But for now, I think until it gets back above that anchored VWAP from that IPO, as well as that 50 SMA and starts trending above a rising 21 EMA, it's not going to really be a focus of mine. Although I do like the story. I think it's really interesting. But even if I like the story, the price action has to match it before I get involved in the stock.
Very well said there, Richard. Thank you. And now we'll send it over to Jack for a pretty beaten down name as of late, and that is Fubo TV, ticker Fubo, FUBO.
All right, let's take a look at this one, Fubo. I have not looked at this chart in a long time, so let's just get my bearings here real fast. Okay. Yikes. So it peaked back January 2021. Actually, the peak was actually December 22nd, 2020. And, it's been kind of a mess ever since. Yeah, I mean, so recently it tried to create some sort of consolidation or base type action, but it failed in November, right around November 5th, 6th. It failed right over there, and it has just been a brutal downtrend since. We're talking top to where it's at now, 53% down since that November, we'll call it November 5th or so. Yeah, I mean, it's in a downtrend. As far as maybe, the May 11th bar is a high volume, very strong bar. So the low there was 1483. So if and when it gets down to that bar, 1483, I'm put a little marker down there. Maybe that will give us some support. It got closer there on December 17th. The low was 1518, and it did bounce at that point. So maybe that's an area where it creates some sort of support, consolidation. But, it's the downtrend is really strong. Again, it's down 50% or so within the last 2 months. And from peak to now, it's down, 75%. So on the long side, I can't see of a reason to be involved with this particular one until it shows some type of strength, and there just isn't any signs of that. Declining 200, declining 50, declining 23-day, declining 9-day EMAs or 10 days, whatever you want to look at. it's underneath all those moving averages. Again, there's just no signs of strength coming from this name right now, at least.
Very well said. Great stuff, Jack. Next up, we'll send it back over to Ben for his thoughts on a place I love to shop because they've got absolutely everything, and that is Costco, ticker COST.
Costco looks good. A little bit of a rising wedge look to this most recent base, but overall, I like the structure. This group has been acting well too. Other members in the group, like Target and Walmart, and some others, holding up well. So I don't mind Costco here. Let me take a look at some of the VWAPs. I think BJ was another one in that group, kind of flagging. Let me take a look on TrendSpider, Costco. Yeah, so it tried to poke out of there this morning. I've got highs 566.55, and the high today 566.62. So it did kind of move in to new high. So what usually happens with this type of pattern, it's kind of wedging up. So you need to either get through those highs and break out into new highs on big volume, or sometimes it'll put another little more shallow cup in, and then you have like kind of a VCP setup. This one would be a little sloppy, but that's what I would look for, is for it to come back in a little bit, put in another little smaller consolidation there, and then break out into new highs. That's the way I like to see this pattern work. Otherwise, what tends to happen is if you can't really push out into new highs, a lot of times it will tag that ascending trend line up top, and then it'll roll over as a wedge. And those rising wedge patterns, when they break to the downside, they're actually bearish. They can get ugly quick. So I'd really want to see Costco definitively move into new highs before I saw a break lower from that falling rising wedge type pattern as I described.
Great stuff, Ben. Thank you. And now we'll head into our two final names here, which both happen to be smaller names. And then after that, we'll go into the closing thoughts from the rest of the speakers up here. So first, we will send it over to Richard for his thoughts on Biofrontera. The ticker is BFRI, and they're a specialty pharma company, for those who are not familiar, that focuses on some skin and acne related products. So ticker BFRI.
Awesome, thanks. Just bring out the chart here. So yeah, this is a recent IPO. I personally tend to avoid biotechs just because there's some added risk there. You can wake up to a gapping down 80% on you if they miss a trial or something similar to that. This is also a very small company. The market cap in MarketSmith is only 105 million. So definitely a very kind of speculative name, I would say. Position size accordingly if you are going to play this one. It also looks to be pretty volatile, just whipping back and forth between 5 and 10 here. Currently $9. Looking at the overall chart, it did have a nice gap up on very high volume, 225.9 million shares traded on 11/24, and that suggests to me that there's some big players getting involved. It pushed up a little bit from that point, then pulled back all the way down to the 21 EMA, undercutting the low of that day. So I don't take that as a huge positive. But then there was certainly a tradable spot here. You had a nice inside day on pretty low volume on 12/7, and then a start of a push upward, a breakout on Wednesday 12/8 above that inside day's high. And from there, it's kind of respected the 10 EMA until pretty much today. So right here, I don't think it's really tradable. I think it's a little bit of a changing character. It's lost that moving average that it has respected, and no one really knows where this will trend down to. I think maybe a spot to watch is around 7.73. That's the 21 EMA, as well as kind of the highs, or at least the area of the highs from the few days from 1213 to 1220. But yeah, not really my personal style of stock, just because it's so unpredictable and can be pretty wild. And once again, there's always that gap down risk with these type of stocks, these biotechs. But this overall group, I think, has seen a lot of strength and power the past few weeks. So yeah, depending on your style, this could be one to watch if it sets up again constructively where you can manage risk. And as I said before, position size accordingly, because this is a more speculative name, in my opinion.
Awesome stuff, Richard. Really well said there. And now, last but not least, we're going to kick it over to Jack for his thoughts on another smaller name that's gotten a lot of attention as of late, and that is American Virtual Cloud Technologies. Ticker is AVCT. It's gotten a ton of daily volume as of late and gotten a lot of attention recently. So we'll send it over to Jack for ticker AVCT.
All right, AVCT, again, very small name. Looks like just started to get a ton of volume in there, but before December, almost no volume at all being traded. So it's volatile, right? I mean, you have days that it's up 82% and 21%, and then there's days that it's down 26% and 27%. So that's one of those things where position size matters, and it's kind of like, you have to understand that this one, I mean, when it goes against you, if it goes against you, it can go against you really, really, really hard. That being said, it is above its 50-day, it's above its 23-day, and it's above its 9-day EMA. Those are the key ones I'm watching. It is below its 200-day, which is at $4.40. And from, let's just see where the VWAP lands. All right, so if you look at the December 10th, which was a big gap up and then kind of a sell-off and closed down kind of weak that day, but still up 21% on the day. Again, huge volume. The VWAP from that day is $2.17, which is where kind of like those moving averages are almost kind of heading towards. And it's an inside day today. So again, it's a crapshoot, man. I mean, the movement is so wild in this one, but it is above its major moving averages, and with the 50-day now flattening out, and the other and the short term ones moving higher. So there's that. But on such low volume, it could be a pump and dump. I mean, I don't know anything about this company, but I always worry that it could be manipulated. It could be a pump and dump. It could be whatever. So if it's your thing and you think this company is going to change the world, I would start off small just in case we're wrong. That's my thoughts.
Great stuff there, Jack. Thank you. All right, and now before getting into the closing thoughts, one more thing. We just got a great question from a listener, so I'll send this one over to Ben if he could address this one. So our listener said, do we just keep hammering semis on the pullback here? And are metals on watch for pullback? So Ben, would love to get your thoughts on that.
Semis are leading, so I think you do definitely keep them on your radar, and you keep going to them until it doesn't work. If you start getting stopped out on several, maybe you back off. But right now they're leading. There's so many names, that are acting really well. It's one of the healthiest. I think Richard mentioned earlier, semis and data storage are like two of the healthiest areas in the market. And for guys like us that are looking for stuff that's moving to the upper right, moving into new highs, that's where our attention is. So names like MU we talked about earlier. We didn't talk about it, but PI is another one that I've had on my radar. But yes, I do think you keep those front and center, because if those start to break down, there's a good chance that the overall market starts to go with it, because those are your leaders. As far as metals, I keep an eye on those too. I was watching FCX yesterday. Broke out 41.60 was the pivot there. It's trading 42 now, I believe. Yep. Another one that I have on my radar is NUE. Nucor, looking for that one to come out. Another one, MP, is another one. I don't like the structure of this one right now. It has kind of a diamond pattern to it, so I have to see which way it breaks. But I think MP Materials, another one worth keeping an eye on. And then, of course, it's hard to talk about metals without talking about what Alcoa has done. Came through double bottom pivot 52.86 and now tagging 60. So I definitely think metals are worth keeping on your radar. Those that I mentioned, there's a few other ones. STLD. Actually, I haven't looked at that one recently, but STLD was another one that had actually really good growth fundamentals behind it. Let's see. Now that one's broke down a little bit, but that had 464% EPS growth this year, going from $2.83 last year to almost $16. So I definitely think metals are worth keeping an eye on. Now, for the overall market, I don't think metals and how they act and what happens is nearly as important as what happens with semiconductors. I think even if you're not involved in semiconductors, which I'd have to scratch my head and ask why, but even if you're not involved, I think it's super, super important to keep them on your radar for the health of the overall market.
Great stuff, Ben. Could not have said that better myself. So really great insight there. And again, if you've been on the space, you can definitely tell that all of our guys up here, Ben, Richard, Jack, Brian, who is here before, all really know their stuff, are absolutely worth a follow. They really are some of the best we have on Finchwood here. So absolutely check them out. Give them a follow. They put out great stuff all the time. Also, real quick shout out, our guy Danny Nas at the Pup of Wall Street, who has been in the audience. So shout out to him for being here. So with that, we're going to send it back over to our guys for their closing thoughts. So we'll just keep it with Ben real quick. If any words of wisdom here, any thoughts as we wrap up the year and head into 2022?
No, I kind of agree with what Brian said earlier. You're going to read a lot of prognostications and that, and I try to let the market guide me more. I did do my kind of every year at the end of the year, I do a wrap up of really diving into the top growth names. I really give heavy weight to EPS growth, tie in a little bit of revenue growth too. And I take a list, which usually gives me about 50 to 60 names, narrow that down to 20, pay attention to what groups are showing the most growth. A lot of times it will introduce some new names to me. So I went through that process over the last few weeks. And, it was interesting to see names like TTD and PubM both showing strong growth. And it just gives me an idea. It was really diversified this year, where normally I'd see tech and